Bitcoin just cracked below $70,000, and this time the pressure isn't coming from crypto. It's coming from oil, war, and the threat of the Fed doing something no one expected. Here's what's actually happening.
The war in Iran has been heating up, not cooling down, unfortunately. But while some people are panicking, the reality is that there's always opportunity if you're looking with the right mind, okay? It'll destroy you if you let it, these kind of geopolitical bumps in the road. But in every crisis, there is opportunity, which is what I want to talk about in today's video with you, because I want you to have the information that you need, but also the right mindset that you need to succeed in times of turmoil, okay? Let's get into it. So, Iran has just broke the global energy market. It's true. It's true. Oil at the time of recording is trading over $100 a barrel. Okay, we've hit $119 two times. These are crisis levels for the price of oil. Some saying we could go as high as 150. That's the Qatari minister. Saudi minister saying we go to 180. Some even saying we're going to $200 oil. And let me just tell you, really bad things happen at 150, 180, and 200, okay? These are not good scenarios. We're talking huge disruption to supply chains, economies, recession, stock market crashes, all that kind of stuff, okay? But it's bigger than oil. Oil is, of course, the one everyone talks about. But 20% of the world's liquefied natural gas is currently offline, okay? 12.8 million tons of LNG per year offline.
Lark's right that the crisis creates opportunity, but timing matters. Bitcoin's pulled back nearly 5% this week alongside stocks. And here's what's different this time. ETF traders are fleeing. $64 billion have left S&P and Nasdaq funds in 3 months, a record.
BitMEX co-founder Arthur Hayes summarized the situation perfectly. He pointed out the performance divergence and stated that Bitcoin is starting to look a lot like digital gold. So, on the surface, Satoshi Nakamoto's vision of a decentralized safe haven is working perfectly. The data proves that when the traditional financial system is under extreme stress, Bitcoin holds the line. But here's where the story turns, because you cannot analyze Bitcoin in a vacuum. The exact same geopolitical conflict that's driving capital into Bitcoin has also triggered the largest supply disruption in the history of the global oil market. Following the initial US-Israeli strikes, Iran's Islamic Revolutionary Guard Corps effectively blocked the Strait of Hormuz. Now this is the most critical energy choke point on the planet. Roughly 20 million barrels of oil per day pass through those waters, representing 20% of the world's seaborne oil trade. And sure enough, the market did not like what it saw. Brent crude spiked from a pre-crisis baseline of roughly $72 a barrel to an
Bitcoin's feeling that pressure too, with $250 million in ETF outflows just this week. That's the hidden trap Coin Bureau is pointing to. Bitcoin outperforming gold is a good sign, but if the Fed actually hikes rates this year, which markets now give 50-50 odds, risk assets get crushed, crypto included. So what are the levels to watch?
So, has Wall Street taken over Bitcoin? It's a compelling narrative. The suits are here, they're evil, they're screwing everybody over. I mean, look, Wall Street's here, man. Back when the ETFs got announced, I said, look, Wall Street's going to show up in a big way. And it's a mixed sort of situation. It's a double-edged sword because on the one hand, they bring the liquidity. They bring the big money. Look at how much money the ETFs have taken in, 1.5 million coins. That's a lot. 7% of the supply is sitting in ETFs. Wall Street showed up in a big way and they brought shit tons of money with them. Thank you. Fantastic. But they also brought all their bullshit with them, all their exotic financial instruments. They brought Jane Street with them. And you can say, Jane Street's an evil company. Screw those guys. They're just the Gordon Gekko mentality. It's not that they want to break something. That's that they feel that they have to because that's what they do. They spot inefficiencies. They spot ways to take money. It's their job. They take money. Is it great? Does it help us? Is it, the Satoshi vision? Of course not. Of course not. This is big boy finance shit, okay? And yeah, Jane Street's one of those players, okay? They're, what's the Dungeons and Dragons term? They're chaotic neutral. They're not here for anything, man. They're just here for the dollar, and they don't care what.
Analysts are flagging 60,000 as the next major support. If 70,000 holds through the FOMC meeting Wednesday, that's your signal the correction is healthy. If it doesn't, 60K is the play. Watch the FOMC, watch oil, and watch those ETF flows. I'll have the full breakdown tomorrow. Like, subscribe, and I'll see you then.